Good afternoon, traders. Welcome to another live trading NFP webinar as we dive into March NFP high impact news data and trading event. And what we'll do is I'll be doing a live trading strategy session as I show you how I systematically and technically approach trading the financial markets during this closely most watched high impact news event in non-farm payroll. Now, before we continue, just to bring your attention to the fact that any opinion, news, research, prices, analysis, or information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you're looking for investment advice, be sure to contact a regulated financial advisor. Now, for those of you who haven't met me, my name is Dumelo. I'm a senior market analyst at CWG Markets, and I'll be taking you through the live trading session today and showing you exactly how I approach trading non-farm payroll on a systematic and technical fashion. Now, for daily tips and updates, be sure to subscribe to this Telegram channel, where you'll receive daily market news and outlooks, educational trading content, webinar access and event updates, as well as official promotions and announcements. So be sure you subscribe to this channel. And if you feel that there's a fellow trader who would benefit from this Telegram channel, then be sure to share the link or the QR code that you see on the screen to your fellow trader and get them to get access to our daily market analysis and updates. Now, the agenda for today is as follows. What we'll do is we'll take a quick look at the economic calendar, check what economic or high impact news are coming up, what economic indicators we're going to be paying attention to, and have a fundamental understanding of what they represent. Then I'm going to go into analyzing the markets, where I'm going to scan the markets, look for trade opportunities to capitalize on. And once I've done that, then I will provide a strategic explanation as to the strategical approach to the markets that I applied for any opportunities that I find and capitalize on in the markets. Now, starting with the economic calendar. So what we have coming up today is we've got high impact news on the US dollar, on average hourly earnings month on month, core retail sales, non-farm employment change, retail sales, as well as the unemployment rate. These are the economic indicators that are going to be affecting the markets today. So breaking down what each economic indicator represents, so you have a fundamental understanding of what it is. First, we have our USD average hourly earnings month on month, which refers to a key economic indicator that measures the monthly percentage change in average hourly earnings for all employees in the US, excluding the farming industry. This indicator is a critical indicator of wage growth and labor market conditions in the US. Next, we have our USD core retail sales month on month, which is a key economic indicator that measures the monthly percentage change in the total value of retail sales in the US, excluding sales from the automotive sector, and it is a critical indicator of the consumer spending, which is a key driver of economic growth in the US. Okay, so overall, this indicator plays a crucial role in shaping the market sentiment, influencing monetary policy decisions by the Federal Reserve, as well as guiding investment strategies in the financial markets. Then we move along to the USD non-farm employment change, which is also known as non-farm payroll, which is a key economic indicator that measures the net change in total non-farm payroll employment in the US. Again, this is a very closely watched economic indicator in the US as it provides insights into trends, employment, and labor market conditions, which are critical factors influencing consumer spending, economic growth, monetary policy decisions as well. Then move along to our USD retail sales, which is a economic indicator that measures the monthly percentage change in the total value of retail sales in the US. This is a crucial indicator that provides insight again into consumer spending patterns and the overall economic activity in the US. And then we've got our USD unemployment rate, which is a key economic indicator that measures the percentage of the labor force in the US that is unemployed and actively seeking employment in the US. Again, this is a critical indicator of the health of the US labor market and overall economic conditions. And all these US economic indicators have a high probability to lead to have high volatility in the market when these economic indicators are released. And my goal today is, if there is high volatility in the market, to position myself in the market where I can take advantage of the high volatile moves, where I can make a lot of amount of pips in less amount of time and catch these high volatile moves and be on the right side of these high volatile moves. And that's what's going to be the goal of this session for me, is to find these opportunities in the market where I can capitalize on this high probability of high volatility in the market. And hopefully you can learn a thing or two of the approach that I take. Now, for those of you that are going to be trading today, just to bring your attention to the fact that CWG Markets does have a 100% welcome deposit bonus, where you can enjoy a 100% bonus on every deposit on your trading account up to $1,000. This allows you to have the opportunity to double your funds, increase your margin, and also double your equity so that you can grow your account in the most efficient way possible. So again, we've got our high impact news on the USD, average hourly earnings, core retail sales, non-farm employment change, unemployment rate, as well as the retail sales. These economic indicators tend to have a high probability to have high volatility and have a high probability to significantly affect the value of the US dollar. So the focus on today in terms of the currency pairs and the assets that we're going to look at are going to be mainly any currency pair that is tied to the US dollar, any pair that is paid against the US dollar or is related to the US dollar, which will include currencies like AUD USD, Euro dollar, GBP USD, Kiwi dollar, dollar CAD, dollar Swiss, dollar yen, gold, which is XAU USD, US oil, which is WTI crude oil, US 500, which is S&P 500, UT 100, which is the Nasdaq, as well as US 30, which is the Dow Jones. So these will be the currency pairs of focus for the session today. So the strategy which I'm going to implement in the session today consists of a strategy that identifies high interest levels, looking at drawing those high interest levels on the charts, analyzing the markets at these key levels, as well as looking for confirmation of entry at those high probable interest levels. Now, this strategy is suitable for traders that are looking to trade the news, also for intraday traders that look for intraday trading opportunities, as well as for swing traders that want to look for low risk, high reward intraday to swing trading opportunities. And when is the best time to use the strategy? The best time to use the strategy is if you're trading high impact news, such as today, or if you're a day trader looking for a strategy to look for intraday trading opportunities. Now, the strategy consists of 5 steps. It consists of identifying our high interest levels, drawing the high interest levels, as well as analyzing the price action at these high interest levels, looking for confirmation of entry at these high interest levels, as well as placing the trade once we have received the confirmation of entry. Okay, so that is the strategy. Now, what I'll do before I explain, go in deeper into the steps of the strategy, I'm going to first be analyzing the markets, looking for opportunities to trade on, as this is obviously a live trading session. And once I've taken trades, capitalized on the market, then I will explain to you in more deeper details how these 5 steps are implemented. Okay, so what I am going to do now is I'm going to move along to the charts. Now, in the charts, what I'm going to do is obviously I'm going to start looking at analyzing the markets. Okay, and I'm going to share a different screen. Again, the currency pairs of focus are going to be AUD USD, Euro USD, GBP USD, NZD USD, USD CAD, USD CHF, USD JPY, XAU USD, which is gold, US oil, which is WTI crude oil, US 500, which is S&P 500, and US 30, which is Dow Jones, and UT 100, which is the NASDAQ. These will be the symbols of focus for the session today, and which are going to be the symbols which I'm going to be looking for opportunities to capitalize on. Okay, so I will give a few minutes or a minute for, if you'd like to follow along with me on your charts as well, to set up your charts as well. So you'll have a minute to do so before I move along and start analyzing the markets. All right, perfect. So starting with the first symbol here, we have AUD USD, which is Aussie dollar. We're currently on the 15-minute time frame. So what I'm going to do is I'm going to switch from M15 to the 4-hour time frame, where I can look for potential high interest levels, which are going to be my supply and demand levels. Starting with the first level I see is over here, and then the next potential level I see should be should be all the way over here. So the first one here is a potential level of demand, where we can see price shot up with high volume here on March the 3rd, 1600-hour candle, and a potential level of supply here on March the 5th, 1600-hour candle, where price shot down with high volume. And again here, potential demand, where price shot up with high volume. Okay, so that's the 15-minute time frame. What I'm then going to do, for a 4-hour time frame, what I'm now going to do is switch to the 15-minute time frame, as you can see here, and I'm going to start looking to draw my levels starting on March the 5th, and using my high volume to help me to identify potential areas here, where I see a potential level over here, another one over here, which is no longer relevant. This one here is still relevant. Got another one over here, which is no longer relevant, as well as this one here, and this one over here. And then we've got another one all the way up here, and this one up here, which is still relevant. So first one is here. Then we've got another one here, which seems like it's a zone. Then if I move along here, we've got this one over here. Okay, and then this one over here, no longer relevant. Right. Then since this is a zone, what I will do to decrease confusion is add this rectangle shape. And anywhere where this shape is, will just represent an area or a zone. there we go. So basically, we've got a level of a zone of demand here where price shot up with high volume, and a level of supply where price shot down with high volume. Then we're going to move along to March the 3rd. I'm going to add this in so I can see where the lows here are. And March the 3rd, I'm looking for potential level of demand, which there are a few clues here that I can see. And so these two here, this is where price moved here as well as over here, which seems like another zone, which as you can see is still relevant. Again, a level where price shot up with high volume. Then we're going to do this with the rectangle so we can see the zone. So basically on March the 3rd, we have the 1700-hour candle and the 1745 candle, which is our demand zone where price shot up with high volume. Then if we look at March the 5th, on the 330 candle, the 220-100-hour candle, and the 2200-hour candle are all levels of where we identified where price shot up or down with high volume. Now, since Aussie dollar here, this is our first level of supply. We do have a bit of time. What I will do is I'll go back to the 4-hour time frame, and I want to identify the next potential level of supply where price shot down with high volume, and it seems it could be, if I zoom out a bit here, yeah, the level could be somewhere over here, which is March the 3rd, 8 a.m. candle. Now I'm going to go back to M15. Well, before I do that, let's go to the end here, zoom out a bit, and yeah, what I'm going to do here is add this so I can see the high, then go back to March the 3rd, see if there's any clues I can see here, which there are a few clues here. There's one over here, which is still relevant, so I'll zoom in a bit there. This one over here. So zoom in a bit, then I will draw this in. This will be the next level of supply, which is March the 3rd at the 400-hour candle. Okay, see if I move along, if there's any other clues since we are here. If there's anything I can see here. And okay, nothing I can see here really, so I'll just focus on those two levels for now in terms of our supply. So delete that, and now if I look at the current setup that I can see here, so there we go, we've got supply number 1 here, supply number 2, demand zone number 1, and demand zone number 2 on AUD USD. So these will be the levels of focus for the session today on AUD USD. I will give a minute or so for you to see your charts as well. And if there's anything that you'd like to align with yours, we'll have a minute to do so. Now, moving along to the next currency, it's going to be Euro USD. So Euro USD, we're on the 15-minute time frame. So what we're going to do here is switch from M15 to the 4-hour time frame. I'm going to look for levels to identify high interest levels of supply and demand, which I see one level over here, which doesn't seem relevant anymore. This one here still could potentially be relevant, as well as this one over here, which also still could be potentially relevant. So the first one here is March the 3rd, 1600-hour candle, where price shot up with high volume, and then March the 5th, 8 a.m. candle, where price shot down with high volume. So it's going to be a potential supply here and a potential demand over here on the 4-hour time frame. Then what I'm going to do is switch to M15. And starting on March the 5th, I'm going to look at drawing the levels, where I do see a level over here, which is no longer relevant, as well as one over here, another one up here, no longer relevant, as well as one here. Then we have another one here, which is still relevant, which seems to be the only one for now. So I'm going to take that, draw the line in that we have over there. This is March the 5th. And again, what we see here is a potential level of supply on the 330 candle, where price shot down with high volume. Now, moving along, let's see what we have here. Okay, we want to have a look at a potential demand here. So we're going to go to March the 3rd and see if there's any clues here. And we do see a clue over here, which is still relevant. And another one down here. Basically, we have like a zone. So that's the first one I'm going to add in. And then the second one is that one over there. And obviously everything that's in between. Okay, so that's the zone that we can see over there. Okay, I'll add this one as well, just so there's no confusion. So this is March the 3rd. We have 1700 hour, 1715, and 1730 candle, where price shot up with high volume. Then for supply, I do see potential clues over here on March 3rd. And again, I'm looking where price dropped down with high volume. Okay, and I see a clue over here, as well as another clue over here. And there we go. So March the 3rd, we have 315 and 400-hour candle, both levels where price shot down with high, high volume. Pretty much both in the same zone, to be honest. Okay, so there we go. So that is what we have over there. Now, if we go to the current price action and have a look now, what we see here is we have, I need to add in the zone here for March the 3rd as well. Again, adding a zone just to not confuse. There we go. So back now to what we see here. If I zoom out, what we have is we have demand number 1, demand zone number 2, supply 1, supply number 2. And these are going to be the levels of focus for the session today on Euro USD. And what I will do as well is I will give a minute so that you can align this on your charts as well. Now, moving along, we're going to have a look at the next symbol here, which is GBP USD. So GBP USD on the 15-minute time frame, we're going to switch to the 4-hour here and look for potential levels of supply and demand, where we do have a potential level over here of demand, another potential level of demand over here, and then supply looks like we might have a level over here where price shot down with high volume. So demand here, March the 3rd, 1600-hour candle, supply, March the 4th, 1600-hour candle, and another potential demand, March the 5th, 1600-hour candle, where here price shot up with high volume, here price shot up with high volume, and over here price shot down with high volume potentially. So now we're going to go to the 15-minute time frame to draw the levels, starting on March the 5th, where we do have a level over here, which is still relevant, it seems. Then another one over here also, we'll have a look at deeper. This one over here, no longer relevant. This one here, not relevant anymore. And we've got one all the way up here, which is still relevant. But this one here, not relevant anymore. So starting with this one here, that price is currently testing. So that's the first one. Okay, the next one here, not relevant anymore. So I'm going to delete that one. And then the next one all the way up here. So March the 5th, we've got 300-hour candle and 2200-hour candle. Now moving along to the next potential level of supply, which is all the way up here, March the 4th. Okay, we do have a few levels which seem to not be relevant anymore. So there's no longer a relevant level on March the 4th. So we might need to go back to the 4-hour time frame to identify another potential level of supply. But for demand, we go to March the 3rd and have a look. So we do have a level over here. Okay, and another one up here, which is no longer relevant. Okay, so March the 5th, March the 3rd, we have 1700-hour candle where price shot up with high volume. And then for supply, I do see a few clues here. But what I first want to do is identify the high there, because I see here on March the 3rd, there could be a potential clue where price shot down with high volume. And it seems to be this one over here on March the 2nd, where price shot down with high volume on the 2200-hour candle. Okay. Let's see if there's any other clues. Okay. Those are the clues for March the 2nd. Okay. And those will be the levels of focus. So now if I go back, zoom out a bit, what do I see here? I see demand number 1, demand number 2 below, supply 1, supply number 2 above. And these are the levels of focus for GBP USD for the session today. So you'll have a minute or so to add in the levels as well on your side if this is something you want to follow along with. Now moving along, we've got NZD USD, M15, switch to the 4-hour time frame, draw in my identify potential supply and demand levels. I see a potential level of supply over here where price shot down with high volume, and another potential level over here of demand where price shot up with high volume. So here, March the 3rd, 1600-hour candle where price shot up with high volume, and March the 5th, 1600-hour candle where price shot down with high volume. Then I'm going to switch to M15 starting on March the 5th to join my levels. I see a level over here, which is no longer relevant since price has just broken through it today. Then we've got another level over here, which is not relevant anymore. Another one over here, still not relevant anymore. And then moving along, a level over here, which is still relevant still. And this is on March the 3rd, 330 candle, where price shot down with high volume for a level of supply. Then for demand, I'll add in my lows here. Then we go to where we identified the demand level on March the 3rd. And as we can see, we do have a level over here, another one over here, and this one here, not relevant anymore. Both are levels where price shot up with high volume. So this level over here and this level over here. Then I see another level over here, March the 4th, where price also shot up with high volume, which is pretty much in the same zone over there, and this one over here. Okay, so I'm going to delete this. So we've got March the 3rd, 1700 hour, 1730, 315, and 330 candles, all levels of demand where price shot up with higher volume. With this one over here, we can make into a zone, again to decrease confusion. There we go. So that's the demand. Now for supply, I guess we're fine with the supply for now. We can identify another level of supply. So back to the 4 hour. The next potential supply could be all the way up here on March the 2nd, which we were just at that level already. So we'll go to March the 2nd and see if there's any clues on the 50-minute time frame. So we're back to March the 2nd. Zoom out a bit. There we go. Okay, and see if there's any clues here, which I do see over here. Starting here, there's one here, another one over here. So that's the first clue. Then the next one is this one over here. This one over here, no longer relevant. This one over here, not relevant anymore. And I see another one up here. This one is still relevant. Another one over here, which is pretty much in the same zone. So there we go. Okay, so delete this one, as this one is a more recent level. March the 2nd, 6:15 and 2200 hour candle. So now if we zoom out, have a look here, what do we see here? What I'll do is I'll just focus on these two for now. So we have demand zone 1, demand number 2, demand number 3, supply 1 and supply number 2 above over there. And this will be the level of focus for NZD USD in today's session. Okay, and I'll give you a few seconds to align it with your charts on your side as well. Right, moving along, we go to USD CAD, switch from M15 to the 4-hour, identify potential supply and demand levels. I see one level over here and another one up here, where this is a potential level where price shot down with high volume, March the 3rd, 1600-hour candle for supply, and a potential demand level over here where price shot up with high volume on March the 5th, 1600-hour candle. Switch to 15-minute time frame, start with March the 5th, look for any potential clues. I see a clue over there, another one up here, one over here which is no longer relevant, one down here which is still relevant, and the one here no longer relevant, so I'll delete that one. Basically what I have is first level over there, second one over there, next one over there. So I've got March the 5th, 1500, 1930, and 2200-hour candle. Okay, next here, let's see another potential supply here, which we identified from the 4-hour time frame. So we're going to go here and see if we have any potential clues. I see a level over here which is still relevant, where price shot down with high volume on 1730 candle on March the 3rd. Delete that, go back to the 4-hour and see if there's any other demand level I can identify in case price breaks below there. And I see the next potential level should be all the way up here in Feb 13, 1600-hour candle, where price shot up with high volume. So we go to M15. Go to Feb 13. See if there's any clues I can see here. Which first let me do this. Make sure this is on the low. Yep, it's on the low here. Go back to Feb 13 and see if there's any clues I see here, which I do see. March, Feb the 16th. There's a clue over here. Another one over here. And these ones here are no longer relevant on March the Feb the 13th. So delete that. And what I'll do is I'll add this one in here, which still seems to be relevant. And then this one over here, which is also relevant. Seems like this is a zone of focus. So add in the rectangle to decrease confusion. Put that in over there. So what we have is Feb 16, 030, and 1000-hour candle. Okay. And since I'm here, see if there's any new levels I can see. There's one all the way down here. We price shot up with high volume. Feb the 12th, 1630 candle over there. Okay. So those are going to be my demand levels. Now going back to the most recent price. Okay. So I'll just focus on this for now. We have supply 1, supply 2, supply 3, demand 1, demand zone number 2, and obviously demand 3 all the way at the bottom for now. But again, I'll just focus on the more recent levels for USD CAD, and these are the levels of focus that you can have a look at as well on your side on USD CAD. So I'll give 30 seconds before I move on the next one for you to align your charts as well, if there's anything that you want to see. So USD CAD, levels of focus for today. Right, moving along, the next one we'll have a look at is dollar Swiss. I'm going to switch from M15 to the 4-hour time frame, and I'm going to identify potential supply and demand levels. So the first level I see is all the way up here, which could be a potential level of supply, and another one up here, another potential level of supply, and one down here, which could be a potential level of demand as well. So 100-hour candle, March the 3rd, where price shot down with high volume, giving a potential level of supply. March the 5th, 800-hour candle, we have a potential level of demand. And March the 5th, 1600-hour candle, we have a potential level of supply where price shot down with high volume. Now what I'm going to do is I'm going to switch to the 15-minute time frame to draw my levels, starting on March the 5th, where I see a clue over here, another one over here, which is no longer relevant, and this one here, also no longer relevant, this clue over here, no longer relevant, as well as this one over here, not relevant anymore. Then we go all the way down here. We've got these two levels over here, which will be of focus. So the first level is this one all the way up here, which is a potential level of supply. This one over here, level of demand, another level of demand, making us a zone over here. So this is the zone. What I'll do is I'll add in this rectangle shape to decrease confusion, and then to see what we're looking at here. So we've got March the 5th, 300-hour candle and 330 candle, both levels of demand where price shot up with high volume. And on the 2200-hour candle, a level of supply where price shot down with high volume. Now moving along from the other clues that we saw, which was this one over here on March the 3rd, see if there's anything else I see as a potential clue, which I see this one over here on March the 4th, 1200-hour candle, where price did shoot down with high volume, giving a potential level of supply, which is all part of the zone that we see over there. Okay, so I'll keep that in. March the 4th, 1200-hour candle, where price shot down with high volume. Then I go to March the 3rd, and I see a clue over here where price shot down with high volume, indicating the next level of supply here, which is on the 1715 candle on March the 3rd, a level where price shot down with high volume. Now if we go here, we've got our levels that we can see over here. And what I do want to see is if there's any clues I identified. Nope. So these are the levels of focus for today. I'll zoom out a bit so you can see here. So USD CHF, I'll add this in as well. So add this in here. For the zone. Right, now zooming out, what we have here is supply zone number 1 here, supply number 2, and demand zone number 1, and this will be the levels of focus for dollar Swiss, USD CHF for today's session. So I'll give a few seconds for you to align your charts as well, if there's any key levels that you want to put on your side as well. So this is USD CHF. Moving along, we're going to have a look at the next symbol here, which is USD JPY, dollar CHF, dollar yen, dollar JPY. And I'm going to switch from M15 to the 4-hour time frame to identify potential supply and demand levels, starting with a potential level of demand over here, which is March the 5th, and then supply. I'll need to go back in time here, and it looks like the potential supply is all the way over here, which is January 23, 1600-hour candle, where price shot down with high volume. And then our demand will be this one over here, March the 5th, 800-hour candle, where price with high volume. It price got 530 candle, 845 candle, all levels of demand where price pushed up with high volume. And then for supply, well, firstly, actually, I see another clue over here that I missed, which is this one over here. And we can see it's a level where price was consolidating before pushing up. And this is on March the 5th, 2345 candle, which is the more recent of demand that I can see. Okay, now for supply, go all the way to January 23rd to look for potential levels of supply where price pushed down with high volume, which I get one over here, next one over here, another one over here, this one over here, this one over here. Well, this one next to it not relevant anymore, and this one over here no longer relevant. So if I zoom in a bit there, I'll add this one in here, this one level, next one is this one here, this one here is in the same level, and this one over here slightly above, which is more like a zone. So again, what I'll do, add this in to decrease confusion. There we go. So we have January 23, 930 candle, 1100, 1300, and 1815 candle, all levels of supply where price pushed down with high volume. So now if I look here in terms of the levels of focus for today, okay, I'll just focus on these for now. So zoom in a bit here. So we've got supply zone number 1, and then supply number 2 all the way above it, demand 1, demand 2, 3, and 4. So these will be the levels of focus for USD JPY for today's session. And I'll give a few seconds for you to align with your charts if there's any level that you want to see on your side. Right, now moving along to the next symbol here, which is XAU USD gold. I'm going to switch from M15 to the 4-hour time frame. And identify potential levels here, which I see potential level of demand over here, potential level of supply all the way up here. So March the 3rd, 1300-hour candle where price pushed on with high volume for potential supply, and March the 5th, 1700-hour candle where price pushed up with high volume for potential demand. Then I switched to M15 starting on March the 5th, and identify any potential clues here from the FX volume, which I see one over here, another one right next to it, and this one over here as well. Then this one here, not relevant anymore, and the one over there, no longer relevant, as well as this one over here. Okay, so zoom in a bit here. Here's the first one. Here's the next one here, and another one over here, which all seems to be part of a zone, which I will just add in over here to minimize confusion. And what we have over here is we have March the 5th, 1100, 1500, and 1515 candle, all levels of supply where price pushed down with high volume. Now for demand, we'll need to zoom back out and go to what we see here is to see potential clues here on March the 3rd, where firstly, in terms of demand, I see this level over here, which is still seems like it's still relevant. Not relevant anymore since price broke through it. But what I am going to do is there could be some supply level clues over here, which I think I'm seeing of here, starting with March the 4th. Okay, nothing on March the 4th. And then March the 3rd, I see a clue over here. And another one here. And these two up here, which I'll just focus on those for now. So that's one here. Okay, another one here. Another one over there. And this one over here. Okay, so two zones here. Here's the first zone, and here's the second zone over there. No, actually, this one is incorrect. They're both in the same level over here. So delete this one and delete this rectangle. Okay, two levels of supply, all in the same zone. The only zone we have is this one down here. So we've got zoom out here, March the 3rd, 1500, 1300, 745, and 730 candle, all levels of supply where price pushed down with high volume. Now for demand, I'll need to go back to the 4-hour time frame and identify the next potential demand level from H4, which I see is all the way around February 20th, 1700-hour candle, where price pushed up with high volume. So I'm going to go here, back to M15, go to Feb 20, and see if there's any clues I see here, which I see a clue over here. There's actually 3 clues here. This one here, not relevant anymore. This one here, still relevant. Another one here, still relevant. And this one over here, still relevant. So let me start with Feb 19. We'll add this in here. There we go. And this is Feb 19, 1630 candle. Then we've got Feb 20th over here. Okay, another one over here. And this one here, not relevant anymore, but this one here, and this one over here. Actually, this one here, yeah, this one's not relevant anymore. Okay, so delete that one. And then basically what we have is Feb the 20th, 545, 1000, 1715, 1730 candle, all levels of demand where price pushed up with high volume. And what I'll do is in these areas, I'll add in the zones, which should decrease confusion. Okay. There we go. So all levels of demand were price pushed up with high volume from Feb the 20th. Now, if I zoom out a bit, okay, what do I see here? I see okay, so I see if I zoom out here and do this, there we go. Let me zoom out a bit actually. So I've got demand zone number 1, demand number 2, supply zone number 1, supply zone number 2, and supply number 3, all the way up there on XAU USD gold, which these will be the levels of focus for the session today. So I'll give a few seconds for you to align any of these levels that are of interest to you on your side before I move on to the next symbol, which we are now moving into US oil. Okay, now next symbol we're going to take a look at here will be US oil. So US oil, WTI, crude oil. So we're on the 15-minute time frame here. What I'll do is switch over to the 4-hour time frame. For our time frame, and now what I'm going to do is identify potential level of supply and demand here, starting with this level here, which is a potential level of demand where price shot up with high volume. This is March the 5th, 1700-hour candle. Now for supply, looks like I'll need to zoom out a bit. Let's see if there's any levels I can see here, which I can see is all the way over here. Well, I see April the 18th, 2024, which you probably won't be able to see on the 15-minute chart. So what I'll do is also have a look here at April the 12th, 1700-hour candle, where price shot down with high volume. So let me start with the demand here on the 50-minute time frame, March the 5th. Again, looking for levels here. There's a level here, not relevant anymore. This one here, no longer relevant. This one here, that one's still relevant. This one down here, another one here, not relevant anymore. And this one down here. So that's the first one I see. Next one up here. And then this one over here. All levels of demand where price shot up with high volume. So 300 hour, 1100, 1500, and 1800 hour candles where price shot up with high volume. Now I'm going to see if I can go all the way to April 2024, which I actually can. April 2024, I can over here. So we're on the 19th of April. If there's any clues I see here, there's a clue. So this clue over here is still relevant. So April 19, 5:30 candle where price shot down with high volume. Then if I can go further back, which actually I can, I see here April 16. See if there's anything I see here. If there's any clues I see. No. Nothing there. I do see one clue though. On April the 16th, over here, where if I zoom out a bit, I can see price shot down with high volume over here before, well, consolidated before shooting down with high volume from that level. So April 16, 4:15 candle. Okay, so that's that. Then if I add this one in over here, next levels I'll have a look at is this one over here. There's two here, there's this one here, and this one up there. Okay, so there. and this one here, and this one there, which is pretty much in the same area. So April the 12th, 2024, we have 1630, 1700, and 1830 candle, all levels of supply where price shot down with high volume. So that should be it now. So now we can see here US oil. We have supply 1, 2, 3, and 4, demand 1, 2, and 3 over here. These are going to be the levels of focus for the session today on US oil. So I'll give you a few seconds to align any levels that you see here of interest on your side as well. And then after that, we'll move on to the next three, or the last three symbols of analysis before I start looking for trades to place. Okay, moving along. Next here, we've got US 500, S&P 500. I'm going to switch to the forward chart here, where I'm going to identify potential supply and demand levels, which I see potential demand here. March the 3rd, 1700-hour candle, where price pushed up with high volume, and March the 5th, 1700-hour candle, where price shot down with low volume for potential supply here and potential demand. Switching to the 15-minute chart, March the 5th, looking for clues here, which I can see. There's a clue over here. It's no longer relevant. And I see one over here, which is still relevant. The one next to it, no longer relevant. So here's this one here, a level that price is currently testing, and another level all the way up here. So first level I see is March the 5th, 315 candle, where price shot down with high volume, and March the 5th, 2200-hour candle, where price shot up with high volume. So do that. Over there. Then I'm going to switch over and see again for potential demand. Let me start on March the 4th and see if I see any clues here, which I don't. March the 3rd. No clues here at all. So what I'm going to do first is I'm going to go down here for the demand, delete this, go back to the 4-hour and see if there's any levels I can identify over here, which seem to be all the way over here, November 24th, 2025, or November 25th, 2025, 1700-hour candle with price pushed up with high volume. So I'm going to switch to M15, go all the way there, and see if there's anything I can find, which I see a few clues here which are no longer relevant, and I see a clue here also no longer relevant, another one here no longer relevant, and the next potential one I see is this one over here, where price shot up with high volume, and this is November 21st, 2025, 1430 candle, where price shot up with high volume. So that's that. Now for the next level of supply, what I'll need to do is add this in over here. Yeah, so add this in here. I actually see a potential clue already. We're ready to go to the 4 hour here. So I see all the way here, March the 2nd. There we go. This candlestick here, where price shut down with high volume. And this is March 2nd, 2200 hour candle. Then moving along, next potential clue is this one all the way up here, Feb 26, where price shot down with high volume on the 1630 candle. Okay, so now if I go to the current price action, zoom out a bit. Okay, basically we have demand number 1 here, supply number 1, supply number 2, and supply number 3 all the way up here, and demand number 2 all the way down here. All right, so the levels of focus will be just these levels for today on US 500. So I'll give a few seconds to align the levels on your side as well before we move on to the next symbols. US 500, S&P 500. All right, moving along, we go to US 30, which is Dow Jones. I'm going to shift from M15 to the 4 hour, identify potential supply and demand levels. I see first potential level over here. Next potential level, I see all the way over here. So potential demand level on December the 10th, 2025, 9 a.m. candle, where price pushed up with high volume. And potential supply, March the 5th, 1700 hour candle, where price pushed down with high volume. Then I'm going to go back to M15 to draw the levels, starting with March the 5th. See if there's any clues I can identify. I see one over here. And another one over here, which is no longer relevant. This one here. Okay, so those are, wait, I see a clue over here. Okay, so March the 5th, we have a level over here, 1630 candle, where price shot down with high volume. And then March the 4th, 2245 candle, where price pushed down with high volume for both levels of supply identified over here. So that is the supply side of things. Now for the demand, I need to go all the way to December 2025, where on the 4 hour, I identified a potential level of demand, which is all the way here, December the 10th. So December 10, I see a clue over here, still relevant. I see another one down here, also still relevant, and it seems to be a zone over here. So there's the first level, here's the second level. Okay, and I'll add this in to minimize confusion, as this seems to be some sort of a zone. So December 2025, the 10th, we have 12:30 candle and 16:30 candle. All levels of demand where price pushed up with high volume. Then if I put this down here and zoom out a bit and see if there's any other clues here, which I see could be potential clues here in December 2025. I'm looking for levels where price pushed up with high volume, which I see this level over here, a level where price pushed up with high volume. December the 3rd, 16:15 candle. And let's do a last one here, since we are here anyway. Another level here, which is in the same zone on December the 2nd, 16:30 candle, where price pushed up with high volume. So this here is a little zone, which I'll add in there. There we go. And another clue I see down here. Okay, so this one here as well. So another zone down here. Let me add in a rectangle. There we go. So basically on December the 2nd, what we have here is we've got 5:15, 10:15, and 16:30 candle, where all are levels of demand where price pushed up with high volume. So now if I go back to the current price, what we have over here is we've got demand zone 1 here, demand zone 2, demand zone 3 below, supply number 1 and supply number 2. And these will be the levels of focus for Dow Jones US 30 for the session today. And I will give you a few seconds to align any levels that you see here that are of interest on your side as well before I continue to the last symbol of analysis, and then I'll start looking for trades to place. So this is US 30 Dow Jones. Perfect. Next is, last one here is NASDAQ UT100. So switch from M15 to the 4-hour to identify potential supply and demand levels. I see a potential supply over here and potential demand down here. So March the 3rd, 1700-hour candle, a potential level of demand with price pushed up with high volume. And March the 5th, 1700-hour candle, potential supply with price pushed down with high volume. Switch back to M15 to draw the levels, looking for clues. See a few clues here which are no longer relevant. This one here, this one over here, then this one here, no longer relevant anymore. So supply, there's nothing here, and then demand. Let's go to demand and see what I see. See here, clue here, not relevant anymore. A clue here, not relevant. Then I see one just below there. And this one over here as well. So if I zoom into March the 4th, there's this level here and this level down here. Then if I go to March the 3rd, okay, no longer a relevant level anymore. So we've got demand here from March the 4th, 5:30 candle and 9:45 candle. Now for supply, I'm going to go back to the 4-hour time frame and see where the next potential level of supply is. and I see a level over here. On Feb 26 over here, 1300 candle where price pushed down with high volume. So back to M15, I go to February 26, 2026, and okay, so what I see here is a clue here, which is still relevant. Another one here, not relevant anymore. Another one over here. So first one I see is this one. There we go. And another one I see is this one over here. Levels of supply where price pushed down with high volume. So this one here is Feb 25, 2330 candle. And next one I see here is Feb 26, 1630 candle. Both levels of supply where price pushed down with high volume. And I'll just add this in here so we can see which one is from where. Right. So this is NASDAQ 100, the levels of focus for the session today. So if I zoom out a bit, let me zoom out. So if I zoom out here, I've got demand number 1 below here, demand number 2 all the way down here, and then I've got supply zone number 1 all the way up here. Okay, these are the most relevant levels to look out for. So that is NASDAQ. I'll give a few seconds for you to align any levels that you see of interest on your side. I'm going to do one more quick run through of the symbols analysis before I start looking at placing trades. Okay, so going back here, we've got AUD USD. Again, we've got the demand zone. The price is approaching over here. Supply 1 and 2 all the way at the top over there. That's AUD USD. Next, we've got Euro USD. We have demand 1, demand zone number 2. That price is currently testing. Supply 1 and supply number 2 all the way above over there. This is Euro USD. Next, we have GBP USD. With demand number 1, that price is currently testing. We've got demand number 2 below, supply 1, supply number 2 above. Next is NZD USD, with price currently testing demand zone over here. We've got demand number 2 below, demand number 3 below that, and then supply 1 and 2 above there. So that's NZD USD. Then next, we have USD CAD, where we have supply 1 and 2 above here, and demand number 1 below, and demand number 2 below that, and supply number 3 above 1 and 2 over there. Then moving along, we've got USD CHF. Let's do this. So USD CHF, we have supply number 1, supply zone 1, supply number 2 below, and then demand zone number 1 below over there on USD CHF. Then we've got USD JPY. Okay, so USD JPY, let me zoom in a bit there. Let's do this. Okay, so USD JPY, we've got supply number 1 here, demand number 1 below, 2, 3, and 4. Next, we have XAU USD, which is gold. So XAU USD, we have supply zone number 1, supply number 2, supply number 3, and then we've got demand zone number 2 at the bottom here, or demand zone number 1 and demand number 2 below that. Then we have US oil, WTI crude oil, where we've got supply 1, 2, 3, and 4 over here. And then we've got demand 1, 2, and 3 just below over there. Then we've got S&P 500, US 500, where we have demand number 1 here, supply 1 and 2 above. Okay, then we've got US 30, Dow Jones, where we've got demand zone number 1, 2, 3 below, and supply 1 and 2 slightly above over there. And then lastly, we've got NASDAQ, where again we said we've got supply number 1 all the way at the top there, which is a zone, supply zone number 1, and we've got demand number 1 below here, and demand number 2 just underneath it. So again, these are going to be the levels of focus for the session today. And what I will do now is start looking at placing some trades. Okay, so starting here on NASDAQ, what I can see here is price is currently in no man's land. It's not testing any high interest level at the moment. So for me, there's no trade for now, unless I see price either come down to test the demand level, where I look for buying opportunities over there, or come up and test the supply. So what I'll do here is I'll wait for the news to be released and see where price gets pushed before placing any orders on NASDAQ for now. So no trade for now for me. Now we've got Aussie dollar here, which I can see Aussie dollar is currently approaching our level of demand. So again, for a high probability setup, I'd rather wait for price to push down to test the demand level. We'll look for buying opportunities over there. But for now, no clear confirmation of entry as yet. And this is AUD USD. Then I'm looking at Euro dollar, which is currently testing our demand zone over here. And I do see potential clue over here to enter. Just want to see something here. Okay, perfect. So what I'll do is I see an opportunity to place a buy stop order, which I can see over here. With my entry price, I'll place on the most recent fractal high there, and my stop loss, I'm going to place it below demand zone number 2, which is the fractal low below that, and that's going to give a 40 pip entry to stop distance with the entry price, the buy stop order at around 1.1571 and stop loss at around 1.1527 on Euro USD. All right, so that's Euro dollar. I'm in on that one, pending order. Next up is GBP USD, currently testing the demand level, giving a potential setup as well, where I can see a potential buy stop order with the entry price at the most recent fractal high and the stop loss at the most recent fractal low, which is also below demand level number 1. And again, I get a 43 pip entry to stop distance with the buy stop entry price at around 1.3350 and stop loss at 1.3306. There we go. Next here is Kiwi dollar, which is also currently testing demand level here, also giving a setup that I'm interested in with entry price at the most recent fractal higher and stop loss at not the most recent fractal low, but the fractal low just below demand level number 2. Again, giving around 26 pips entry to stop with the stop loss or the entry and the buy stop order here at the 0.5884 and stop loss at around 0.5858 on NZD USD. All right, now moving along, we'll have dollar CAD, which dollar CAD is currently sitting at no man's land here. Yeah, currently sitting at no man's land. And for higher probability setup, I need to either see after the news is released a push below to the demand level to look for buying opportunities, or a push above at the supply level to look for selling opportunities. But for now, no confirmation of entry. Next is USD CHF, which currently is also no man's land. But for high probability setup, I'd like to see price push up into the supply zone here, where I'll look for confirmation of entry to sell. But until then, no trade for now. We'll just wait for the news to be released. Next is dollar yen, USD JPY, with price currently in no man's land as well, where high probability setup is to wait for me and see price come up and test the supply level and look for potential confirmation of entry to sell. But until then, no trade for now. Next is gold, XAU USD. So I'm going to zoom in a bit more here. Same thing here, prices in no man's land. So seems a high probability setup. So either wait for price to come down off the news, test the demand level to look for buying opportunities, or wait for price to retest the supply zone there to look for selling opportunities. But until then, no trade for now. Next is US oil, with price currently testing our supply levels over here. What I do want to see here is go back to the 4-hour. Okay. Right. So US oil currently testing the supply here. I'm looking for what I want to do here in terms of selling opportunity. There is opportunity to sell, but I don't see a price of entry over here. So if I do this, yeah, now information of entry as yet. So just keep an eye on this one. But I do want to look to sell from the supply level over here. I just don't have entry level I can use. So that'll leave that for now. Moving on to the next one, which is S&P 500, US 500. See an opportunity to place a buy stop order here. My stop loss on, I won't use the most recent fractal high. I'll use this fractal low, which is below the demand level, and entry price. There's no fractal over there. So what I'll use is this candlestick over here, the high of this candle for my entry price, which is the candle that pushed into the demand level. So entry sitting in around 6,811 and stop loss at around 6,766 for this buy stop order on S&P 500. Then I have US 30. If I zoom in there, I can see price is currently in no man's land, but for higher probability setup, I'd rather wait for price to come down, test the demand level, where I'll look for buying opportunities. But for now, no trade for now. And lastly, we've got NASDAQ, which I already analyzed. Still no trade for now. Okay, so those are the orders I've placed. There's about 8 more minutes till the news is released. And then from there, I'll look for any additional opportunities that arise. So I'll do another quick run through. Aussie dollar, still fine. Euro dollar, still happy with that setup, as well as GBP USD, Kiwi dollar, dollar CAD. Dollar Swiss, dollar yen, gold, US oil, S&P 500, US 30, and NASDAQ QT 100. Right, so those are the levels of focus. So we'll just wait here for another 5 to 6 minutes until the news gets released. So we'll do another run through, see if there's any new setups to take before the news gets released. I do see a potential here in US oil, but I'd rather wait for the candle to close. Where I see a potential sell stop order, I'll just put the order in. I won't place it until I get the confirmation. Where I see a potential entry on the low of this candle with the high volume and stop loss just above our demand number 2 there. So entry will be around 83.20 and stop loss 85.72. But just keep an eye on this one. Not going to place it just as yet. Okay. News is released. Okay, there's a little bit of volatility. Nothing major. Again, euro dollar is triggered. So is GBP USD, which I see it's pushed up into the supply level here. So definitely need to keep an eye on this one for potential heavy reversal. But again, trades need to be managed according to your risk management strategies. Okay. Dollar yen is pushing into the demand zone here, which is now going to give an opportunity for a potential buy here. So let me delete this here and see this needs. I'll need to wait for this candle to close to confirm, but I see a potential to start looking for buying opportunities on dollar yen here. There we go. Now US oil is now giving me a setup here, which I see a sell stop order on the fractal low over here, most recent fractal low, and stop loss just above supply number 2 over there. And again, entry is looking at 83.20, stop loss 85.72. So do this one over here. Okay. Okay, so that is US oil. I'm in on that one for potential sell. US 500, I'm going to have to update this one since price is pushing below the supply there. I want to see, yeah, I'll just use the candle low there. So I'm going to cancel this order. And it's a pending order, so I'm going to cancel it and wait for a better entry to stop, which I can see could be potentially the high of this candle and the low of this candle for entry and stops. But I'll just put this in for now, and I'll confirm it at the close of this candle, which will be in about 12 minutes. Now we've got US 30 Dow Jones is pushed into the demand level and is now setting up a potential for a buy setup that I'm interested in. Again, I'll just need to wait for this candle to close. But again, what I'm looking at here is a potential buy stop order, which would look like potential for entry over here. and stop loss below demand zone number demand zone number 1, but nothing confirmed as yet. We'll need the candle to close. Nasdaq still in no man's land. Aussie dollar, no traders yet. Euro dollar is pushing up a bit. Same with GBP USD. Kiwi dollar has triggered as well. It looks like USD CAD is pushing down. So if that's the case, then the next potential is for a push down into the demand level. Okay. But nothing confirmed as yet. USD JPY, what I'm seeing here for a potential buy stop order, the entry, I'm going to use the range over here. This price is pushing back into this range before it pushed out, and the bottom of the range for the stop loss over there. Nothing confirmed as yet. We'll wait for the candle to close. Gold is pushing up now, so I'd rather wait for potential of a push into the supply level for potential sell entry. Then you've got US oil and US 500, US 30, and the Nasdaq over there. Okay, so while we wait for the markets to set up, I'll give it about 10 minutes for this 15-minute candle to close before I look for new trade orders. What I will do is I'll quickly run through the strategy which I applied in looking for trade opportunities today, the strategical approach to the markets. So what I will do is I'll share a different screen here. So this is a 5-step strategy which consists of identifying our supply and demand levels on step number 1, drawing our levels of supply and demand on step number 2, step number 3, analyzing the price action, step number 4, looking for confirmation of entry, and step number 5, placing the trade. All right, so step number 1, which is identifying potential supply and demand levels, we do that on the 4-hour time frame using the forex volume indicator, which is an indicator that helps us to identify areas where the smart money stepped into the market with high volatility, where we're looking for a potential supply level, which is a horizontal price level where price goes down, or in other words, a high probability sell zone, and a demand level, which is a high probability buy zone, a horizontal price level where price pushed up with high volume. So that is step number 1 of this process. Then step number 2 is to draw the levels. And to do so, what I did is I drilled down to the 15-minute time frame and still using the FX volume indicator to help me to identify levels where price shot up or down with high volume to draw potential demand or supply levels on the 15-minute time frame. And that is step number 2 of this process. Step number 3, by the way, this session is recorded, so if there's anything you want to revise, the recording will be posted on the Telegram channel for you to rewatch and take notes. But step number 3 is analyzing the price action, which is done on the 15-minute time frame. And basically the goal here is to analyze the price action to see where the high interest levels are from the smart money perspective, as well as where the retail trading is induced as well, in order to analyze exactly what price is doing and what price direction is highly likely to happen next, based on where the retail traders are being induced and where the high interest levels are in terms of the clues from the smart money. So once that is done, you go to step 4, which is to look for confirmation of entry. With confirmation of entry is done by looking at which level price is currently testing, whether it's a supply or a demand level, where if price is currently testing our supply level, then we look to sell from the most recent supply down to the most recent demand. And if price is currently testing a level of demand, we look to buy from the most recent demand level up to the most recent level of supply. So basically, this is supply and demand 101, where you buy from demand to supply and you sell from supply to demand over there. Okay, and that is step number 4 of the process. Then the next step of the process is to go to step number 5, which is to place the trade. So how do we place the trade here? Place the trade ideally before the high impact news NFP is released to take advantage of the volatility. And you use your order options, which is one of the 3 options here, a combination of any of the one of the 3, where you can place your order using the most recent fractal high or low for your entry or your stop loss, or you use the range. If the market is moving sideways, you use the top of the range and the bottom of the range, or the high of the range, the low of the range for the entry or the stop. Or if you're using a specific candlestick, you use the high or the low of that candle to set your entry or your stop loss. And again, you can use a combination of any one of these 3 to give you the best entry to stop setup to place the trade after you've received the confirmation of entry. Okay, and that is step number 5. But what is important here is, in terms of your risk management, is to always make sure that you manage your risk diligently, meaning that you have a predetermined risk factor, meaning you know how much of your account you're willing to lose per trade you place on your account, which is important because that will allow you to know when you enter the market where to exit the market with a loss or a profit. That will help you to calculate your trade risk, which is how much you're going to risk per trade, your points at risk, which will be based on where you're going to enter the market and where you're going to exit the market with a loss. That will tell you how much points you're going to risk on that particular trade. And that together will help you to determine the volume you need to set for every single trade that you place based on this calculation. Okay, so this is very important. Always make sure that you manage your risk diligently. Right. Now, this volume will be determined based again on your trade risk, which will be based on your account size. Now, in terms of your account size, with CWG Markets does have what we call a cent account, which allows you, with a minimum deposit of $10, to get access to a high leverage multi-asset trading account with CWG Markets, which will allow you to get access to trading currencies, stock indices, commodities, cryptocurrencies, as well as stocks themselves, and have access to leverage of 1:1000, as well as EA automation support. So just with the minimum deposit of $10, that gets you access to the CWG Markets Cent account, where you can start with a minimum deposit of $10 and trade with CWG Markets. If this is something of interest to you, scan the QR code that you see on the top right hand side of the screen there, so that you can apply and get trading with CWG Markets, as well as taking advantage of the welcome deposit bonus, which is a 100% welcome deposit bonus, where you can enjoy 100% bonus on every deposit up to $1,000 on your trading account. So you can double your funds, increase your margin, double your equity, and grow your account in the most efficient way possible. Right. But other than that, what I'm going to do is I'm going to switch back to the charts here. And since the markets are starting to shape up here, what I'm going to do is look for any new trading setups that are happening. Okay, so UT100 NASDAQ still in no man's land, but what it looks like here is price is pushing down into the demand level over there. So setup for me here would be a push down into the demand level, where I'll be looking for buying opportunities over there. Then we have Aussie dollar, which looks like it's starting to push up over here. But again, a more high probability setup is for a push into the demand level, where I look for buying opportunities. Or if price actually pushes up, then I'll have to wait for price to reach all the way up here to the supply level, where I look to sell. But nothing for now. Euro dollar is pushing up. So again, what I'm looking for here is a push up from our demand level number 1 up into supply level over there. So that's the room I have for my trading opportunities. Then we've got GBP USD, which, as we can see here, is currently testing our supply level, which is a high probability sell area. So this is important. Since I'm already in on a buy trade over here, I'll have to keep an eye on here for potential reversal off this level, where what I will do here is minimize my stops by moving my stops to break even, because it could be a potential setup over here where reversal from this level, I can see a potential entry here on this candle with the high volume on the low of this candle, and the stop loss on the high of this candle, which is just above the demand, the supply level number 1 over there. So that could be a potential reversal for a sell opportunity. So again, I'll keep an eye on this one to see any confirmation of the reversal. I'll minimize my stops to break even and look to sell from the supply back down to the demand. So that is GBP USD. Kiwi dollar, the buy is triggered there. I'm still looking to buy from demand all the way up into the supply over there. Okay. Into the supply over there. So I still have enough room there, and I'm still happy with this order. USD CAD is pushing down. Again, high probability setup is for a push down into the demand level, where I'll look to buy from there, but no trade for now. US dollar Swiss, we can see it's pushing down here. So the setup here is for a push down into the demand level over here, where I will wait for a confirmation to buy. Until then, no trade. Then we have dollar yen here, which is starting to reverse off our supply level here. Our demand level. Now the entry, I'm going to reset here. I'm going to use the high of this candle here with the high volume that price pushed into the demand level here. And stop loss, I'll still use the bottom of the range here, which is this fractal low over here. So entry is looking at around 157.88 and stop loss 157.33 for stop loss for this buy pending order. So that's entry and stop, and I'm happy with this to enter this buy stop order on dollar yen. Next is gold. Looks like it's pushing up. So the setup I'll wait here for is a push up into the supply level, where I'll look for selling opportunities. But for now, no trade as yet. Next is US oil, which is currently in the supply zone over here. I'm still happy with this order where I'm looking to sell from the supply down into the demand. Okay, so that's US oil. Next here we've got S&P 500, US 500. You can see our price is pushing below demand level number 1. And I see here it's pushing down here. The next demand is all the way down here. So there's no clear setup to buy here. So that's going to be a no trade for me for now on US 500. I'll need to wait for more clearer price action or a push back into the supply. But for now, US 500, I'm no longer interested in this one. US 30 though, I'm still interested in this one, where I can see prices pushing into demand zone number 2. So what I'll do here is I want to place a buy stop order, but I want to set my stop loss just below demand zone number 2 there to minimize stop hunts over there. So, and the entry here, I'm going to use the high of this candlestick with the high volume that has pushed into demand zone number 1. So entry price is around 47,732 and stop loss 47,312 for a buy stop pending order. All right, that's US 30. Next, and the last symbol for the session is NASDAQ. As you can see now, it's starting to push into the demand level as anticipated, but still no clear confirmation to enter in terms of where to place entry and stop. What I could see here for a potential buy stop over here is, since price is pushing into the demand level with high volume, I see this fractal low below demand level number 1 as a potential stop loss area, and the high of this current candle as a potential entry, but nothing as confirmed as yet. This will need for you to keep an eye on this for the rest of the day. Okay, so that's NASDAQ. So again, one last run through, see if there's any things sitting up here. So those are the orders for today. Oil, I'm going to cancel this one since price is pushing above the stop loss area. I'm still happy with the entry price, but what I will do is, so do this, entries at around 83.20. So I'm going to cancel this one and basically wait for a more clearer setup and see where the current momentum is to place a stop loss, where it could be anywhere above the current supply levels or this fractal high over here at 87.06. But nothing is confirmed as yet. This will need a bit more time to keep an eye on this market for the rest of the day. Okay, so there we go. But other than that, those are the moves for today. All right, traders. So if you did enjoy the session today, we kindly request that you leave us a review about your experience in the training session today, because your feedback is appreciated to allow us to maintain the quality of the education that we provide to the CWG trading community. So scan the QR code that you see on the screen and kindly leave us feedback. But other than that, if you'd like to get in contact with me myself to ask me any trading related questions, feel free to either send me an email or scan the QR code that you see there for a WhatsApp. So you can either message me directly on WhatsApp or send me an email by following the links or scanning any of the codes that you see on the screen over there in order to get in contact with me directly. But other than that, that's going to be it for the trading session today. The live replay will be posted on the channel shortly after this webinar ends. But enjoy the rest of your day, enjoy the rest of your weekend, and we'll see you for the next webinar, which will be our weekly webinars, which are on Mondays and Wednesdays. So the next webinar will be on Monday, the 9th of March, as we look at a weekly market outlook for the week. But other than that, enjoy the rest of your day. Bye for now.